Hello, my name is Adit Mittal. I am a sophomore at Michigan San Jose High School, and I'm here today to pitch Aptiv, ticker symbol APTV. So, what is Aptiv? Aptiv designs and manufactures vehicle components and provides electrical, electronic, and active safety technology solutions to global and commercial vehicle markets. Aptiv's products and solutions create a world with zero vehicle accidents, zero emissions, and seamless connectivity between vehicles, devices, and even smart cities. Aptiv provides leading architecture. It's the only company to offer both the brain and nervous system of an autonomous vehicle and remains well positioned to develop solutions for future mobility problems and challenges. Now that you know a little bit about what Aptiv is, let's look at its competitors. So, its main competitor is BorgWarner, which is, like Aptiv, a business service company. Let's look at some standard metrics to prove Aptiv is the better company and the company that deserves your investment. To start, let's take a look at valuation and earnings. Aptiv beats BorgWarner in both categories, with gross revenue of $15.62 billion compared to BorgWarner's $14.84 billion, and a net income of $590 million compared to BorgWarner's $537 million. Furthermore, Aptiv has a net margin, or ratio of net profits to revenue, of 3.78%, compared to BorgWarner's net margin of 3.62%. Finally, looking at the five-year charts of both stocks, we can see a vast discrepancy between how the two companies performed in the long run, which is crucial to consider when deciding if a stock is worth your money. So, as we can see, BorgWarner just doesn't compete with Aptiv when looking at the finance world's most common and fundamental metrics. Let's move on to the investment thesis, where I will describe why Aptiv is an excellent investment. In this section, I want to talk about three essential factors that will lead to Aptiv's success. First, stewardship, or the management of the company. The management team of Aptiv states that its cash priorities are maintaining an investment-grade credit rating, reinvesting in the business, making acquisitions, and returning excess cash to investors. In fact, since Aptiv became a publicly traded firm in November 2011, the company has returned roughly $7.1 billion to investors, averaging about $707 million per year, in the form of share repurchases and ordinary stock dividends. It's also great to see that Aptiv rewards management for performance, aligning executive and shareholder interest by focusing on cash flow, earnings, return on net assets, and long-term growth. Second, Aptiv has created a host of savvy partnerships and strategies. One of Aptiv's most intriguing partnerships has been with ride-sharing company Lyft. In May 2018, the two companies launched a public autonomous vehicle service in Las Vegas, which provides travel to over 2,100 entertainment venues, restaurants, and destinations. Aptiv has completed over 60,000 rides and garnered a rider rating using Lyft's app of 4.97 out of 5 stars. The partnership gathered valuable data over those tens of thousands of rides and proved that consumers were willing to adopt, trust, and pay for their driverless service. Another example of how Aptiv can thrive is its partnership with the BMW Group and Intel's Mobileye. It came on board to provide a prototype computer platform to aid in perception, high-performance automated computing, and sensors. Aptiv's brain and nervous system technology looks like it will remain in high demand throughout the industry. Finally, its location. Please take a look at this graphic from Aptiv's autonomous driving survey. In part because China accepts driverless technology, and partly because China is also heavily encouraging the adoption of electric vehicles, Aptiv announced plans to expand its global testing with the opening of its China Autonomous Mobility Center, currently located in Shanghai. The move brings Aptiv one step closer to international development and adoption of driverless technology. It's one more reason the company is better positioned to seize the autonomous vehicle opportunity over the coming decade than many of its competitors. Conclusion. So, it's pretty clear to investors and consumers that the future of transportation will revolve around electric and driverless vehicles. That future might be in the far distance, but that doesn't really mean Aptiv isn't already a solid investment. Despite slowing global vehicle production, the company has posted reliable operating performance and topped estimates. That's good news for investors cautious about investing in the automotive industry. And it shows that Aptiv is better prepared to outperform expectations in the face of industry headwinds while waiting for other growth in the driverless vehicle sector to accelerate. While we don't know which companies will come out on top in the driverless vehicle boom, it's clear that Aptiv has the management, global presence, and critical partnerships to carve out its position in a lucrative market. Don't wait to buy Aptiv, but rather buy Aptiv and wait for your profits. Thank you.